Thanks for joining us on Your Kentucky in a Home. I'm with Jason with the LPK Group. We're going to talk mortgages today.
Yes, we are.
So we're in a house that's a little over $600,000, and you were telling me off camera about sometimes it's not great to put a bunch of money down on the house because you can reinvest that in other places. Can you talk to us a little bit about that?
Absolutely. You know, Kimberly, it's a common misconception in some regards that, you know, a lot of times the reason people want to put the money down is they want to get around mortgage insurance. That's the main thing that they're trying to avoid. But what ends up happening is that you look at a house like this, for example, and it's a $635,000 home. I have to have some cheat notes here, else I'll make a mistake. But if you put $63,500 down, which is 10% down, so your mortgage is about $571,500. So you would say, all right, well, let's talk about an average rate of 4%, just so that we can use that during this segment. So you're talking about a mortgage payment of $2,728 and some change, all right, $2,700 just for simplicity. If you put down an additional 10%, which is 20% down on the property, you're putting down about $127,000, okay? That $127,000 leaves you with a mortgage about $508. Using the same interest rate at 4%, your mortgage payment's about $2,425. So as you and I look at it, let's just look at it from $2,400 to $2,700. It's $300. So one of the things that Mike Prestigiacomo and I and the LPK Group really pride ourselves on is looking at the delta and the cost associated with money. And the reason that that's so important is that in today's day and age, cash is king. And so you look at that other $60,000 that you're putting down, okay, looking at the difference between 10 and 20. You're reducing your mortgage payment in this scenario by $300. We're using rule of thumb. How long does it take you to reamass that money? Well, if we did $300 for 12 months, we got $3,600. In 10 years, I've amassed $36,000 of the 60 that I've still put down. It's going to take me another 10 to 15 to 20 years before I've recouped the amount of money that 60 grand I've put down. So what could I do with that money if I put it into whole life, or if I put it in other investments, or I did something else to free up what I want to say a better rate of return than in some situations potentially your home can be. And so what we like to do is we like to show people their options, because there are a lot of options when you start talking about mortgaging a property and how the mortgage works, because there are pros and there are cons. Obviously the interest is a tax deduction. But at the end of the day, if you've got other debt, car payments, you know, other things that are college, other situations, maybe you have an aging parent or something like that that you need to look after, that money, that $60,000 in this scenario could really do a lot for you as a consumer as you look at how your life's going to go forward. And as you and I know, once you put the money into the house, the only way to get it back out is to refinance. So, you know, the nice thing about a property like this is that it is affordable. I mean, when you stop, Kimberly, and you think about it, you say $2,700 or a $2,400 mortgage. It's really not that big of a mortgage for a $600,000 property. It just isn't.
No, and you would think that a $600,000 property would have more of a mortgage.
You would. And the reason being is that, again, money's cheap today. I mean, you're talking about 4%, 4.25% on money. I think if you go and you spend something in a whole life type of a mutual fund or something like that, you're looking around 8%. So the cost associated with real estate is still really, really good. I know people get tired of hearing that, whether it's the Sunday infomercials or it's the banks telling you that. But the reality is this, that when you look at a property like this, that Homepage Realty and Annie Bender has listed here, this property is not only unique, there's some real neat characters that live out and around this property as well. And you're talking about spending maybe a couple $1,000s to mortgage a property like this, it's pennies on the dollar.
And so for someone out there that's interested in this property, and let's just say that they have a house that's $300,000 to $400,000 and they're ready to move up, or they want something a little bit different, what are some of the things that they need to think about? Because they probably have not financed anything for a long time. You
know, Kimberly, you bring up a valid point there. The laws have changed a lot. The TRID laws have really affected the way the mortgages work and the way closings work. But anymore, people used to say, I want to get pre-approved. Now it's credit approved. So there's different pieces that have come into the way that the whole financial sector extends itself to the real estate game as a whole. But you look at a $300,000 property and somebody would say, oh my gosh, I'm doubling. Well, hey, if they didn't put but 5% down on a $300,000 or $400,000 property, they've got a $2,000 mortgage or more. So you're only talking about potentially moving, let's use the higher end. Let's say you're only able to amass 10% down. You may be only moving $600, $700. Relatively speaking, I see a lot of cars on the road that people are leasing and financing that they're paying $600 and $700 for. I think you'd much rather have a property like this in this part of the the town than a car on the road, to be honest with you.
6 months before you sell a home, we should go talk to someone like you, and what are the things that we need to get in order so that we can make sure that we're credit approved when we go to buy a house?
You know, there's a lot of things that when you talk about getting ready to do it, the biggest thing is you know, now we're starting to look at 2016 tax returns. I actually got an email this morning right before our segment. I was messing around with my phone, and now our underwriters are starting to hunt for the 2016. It used to be the 2015, the 2014. So you've got to have your last 2 years tax returns. You need to have your W-2s for the last couple of years. You need to have at least 30 days worth of bank statements and pay stubs in a manila folder like this that you would bring to your lender, along with some other non-essential things. If you've got retirement and stuff like that that you're using, you want to prove that you have worthiness, and you want to show that you have some depth to you from a financial perspective. Now, let me say this very clearly. Even if you don't have good credit or you don't have a lot of financial depth, there's so many different loan programs that are out there, Kimberly, that it doesn't eliminate the market. I mean, we've lent down to the 580s and 550s if they don't have late payments in the last 12 months and they've got some compensating factors. A compensating factor may be car payments. A compensating factor may be other little trade lines that help them. It could be as simple as making payments to JCPenney's on a TV they bought, and they've been doing that on time. So, you know, the time is now for people that want to go out and get into the real estate arena or want to make a transition or want to make a move. And definitely when you talk about this property here, moving from a $300,000 or $400,000 home up to something like this is not a real big jump. It just truly isn't, depending on how you've amassed your money. Now listen, if you did put down 20% on a $300,000 house, you've got the 60 grand to put down here as well.
Yes.
You've got the 60,000 here to put down as well.
Oh, well, this was wonderful. This was so much information, and I know that everyone out there really needs it. Is there anything else that we need to know that we haven't talked about?
You know, I would simply say this. If you're wanting to understand what your options are and what something would look like from a financial perspective as it relates to a mortgage, you know, give us a call or reach out to us. Now, I know it sounds like a commercial, but at the end of the day, I encourage everybody, when you start to involve real estate transactions of people, you've got to go with what your gut tells you. And one of the things that we pride ourselves at mylendingrate.com, Kimberly, is that we really pride ourselves here at the LPK Group of doing things right. We look at 4 simple principles: communicate, educate, serve, and do it with effort. And we see it like this, Kimberly, is through the effort that we provide a service. There's a lot of good lenders in Louisville, make no bones about it. And so understanding that that service is omnipresent, we see it as it's our job to educate people and really sit down with them and whiteboard out the cost associated with doing a mortgage, the cost associated with buying the property, the cost associated with the transaction itself. And through that education process, we want to communicate as our calling card. And how we do it, Kimberly, we want to kinesthetically connect with people so they can feel their way through the learning process. We want to auditorily deliver to people so they can hear their way through the learning process. And we use whiteboards and TVs in our loan officers' offices so they can see the way that this is going to play out, because we don't want to make any assumptions about how people like to learn. And therefore, as they come away from the experience with us, they can say to themselves, you know what, at the end of the day, I was well informed and I thoroughly understood what was going on with the mortgage process and with the costs.
Thank you so much,
You're very
Jason.
welcome.
This was so wonderful information. If you're interested in purchasing a home soon, please give Jason a call with the contact information on your screen. You need to plan ahead.